If you're OPEC right now, what are you thinking?
I think you're thinking, firstly, that oil prices have been sliding. They were down below $90 a barrel at one point. That's territory that Saudi Arabia doesn't want to see prices. I don't think Russia wants to see them there either. And so I think that this is an attempt to sort of, if you like, talk the market back up. I mean, let's face it, an output cut of 100,000 barrels a day on paper targets that they're already missing by more than 3 million barrels a day is meaningless in terms of actual physical supply. So this is about messaging. This is about telling the oil markets that OPEC Plus is prepared to act and act quickly if the market looks like it's weakening.
By putting extra barrels if needed, because we're like September 5th. I mean, we've had a very warm summer. What happens like December 1st when it's minus 20 degrees?
I think this is going to be the really big question, because on the 5th of December, a European Union ban on seaborne imports of Russian crude comes into effect. That could take between 1.2 to 1.4 million barrels a day of supply off the market, unless Russia can divert even more of its crude to India and elsewhere. And of course, Russia is a key member of the OPEC Plus group. So that makes for a very difficult dynamic, because Russia, I don't think, is going to want the rest of the group to increase production if they're able to take its market share. So I think that leaves OPEC Plus in a very difficult position in terms of actually balancing the market come December.